defending 3900 ES, OPEX, and how to use the opening range. That's the weekly outlook for the week of January 15, 2023. Hey everybody, I'm Josh, founder of Trade with Profile. We are a skill development firm aimed at helping you, an active developing futures trader, specifically looking for ideas in the S&P futures, NASDAQ, crude oil, and Russell, to come each week and use the profile as kind of the foundational analysis to organize market information and make better decisions. Rolling up that information into a playbook that you can express and get your equity curve up and to the right. So we express that through our development desk and traders going through our development pathway. This is kind of the first step each week where we take an overview at the week ahead. We look at key levels, we look at macro ideas, and kind of get ourselves a grounding and foundation for the work before we go and look at the specific products. So with that being said, we're going to jump right in and kick it off. And the place that we typically start is where we're talking about the macro perspective and what's in play there. So the place I'm going to start from a macro this week is kind of twofold. I mean, one is that we are in this place of complacency. Now, if you've not seen this chart, you've not watched one of these before, we look at this chart every week. But what this is a comparison between the SPY, the ETF that tracks the S&P 500, and the VIX curve. So this is expirations of volatility, basically telling us where participants positioned. And what's the key takeaway? The key takeaway is that markets rally when everyone is fearful and they fall when everyone is complacent. So what are we looking at this week as we come in? We've had a non-farm payrolls report. We've had CPI, the first CPI of the year. Where are we? Well, we're at a spot of max complacency. How do we know that? Well, if we look at the short end of the curve, so this is just looking at the VIX between 9 days to 30 days out. We're at about as complacent a reading as we can get, like below 4 and on that spread, and we're significantly complacent on the longer one. So this is 9 day versus 1 year. We're at 9.81. Below 10 is pretty complacent. You can go back and look historically when we've seen these curves this low, what has come after that? I mean, it's just physics, gang. It's when you got a curve that's so complacent, participants are so complacent, risk is underpriced. So then someone's going to take advantage of that. The idea is to buy risk when you don't have to, not when you need to. So it's underpriced right now. We're getting almost close to a spot where we have, kind of a max complacency here. This is a combined curve. So this takes both of these and combines them. We're getting close to a spot where we're about as complacent as we can get. And that has led to some pretty big moves lower of recent memory. Okay, so we're going to keep an eye on that, especially as we go into additional earnings season. Now, another thing that I want to call out here from just a macro perspective is that we're watching a market that is largely tracking significant events. So that the big story is inflation and what's the Fed going to do with interest rates. Now, what I've done with this chart is I've laid on top of it a number of anchored VWAPs from CPIs and FOMC and Fed statements and one non-farm payroll statement, just to kind of get an idea of what has that meant for all participants. And this is why that 3,900 is so crucial. So let's start by going back to this date back here. So this is a CPI in October. That you can see that trails all the way up here to around 38.80. We had another CPI back here in November. That one is now to 39.47. We had another CPI in December. That one is now at 39.14. We have an FOMC. So these light blue are FOMC. That's 39.27. December, 38.88. Okay. So there's a cluster. Basically, all of the key binary references from October, November, and December, all are in a cluster below us. And if we break through these, then there's really nothing in the way to the downside. And for anybody who's talking about kind of this macro narrative that ultimately equity prices got to go lower, that there's no way we're going to go higher, and this is just a squeeze. Well, you can get squeezed really, really, badly if you are, too into that narrative. So how do you position or time that so that you're not so over levered to the downside? Well, one is to watch these references from these prior stories. If we start slicing through these, that to me is the clue that the next leg is in play. Okay. So until that happens, any path to the upside is in play up to last year's anchored VWAP. So that's the most traded, or the anchored VWAP, the year to date from 2022 that we're trading up towards in this 40.75 area. So we could easily test to the top of this area before we start moving. And with OPEX at the end of the week, don't be surprised to see this stretch a little bit more. But then if we see liquidation back through this area post OPEX, that's when a bit of the trap door comes in, and we even kind of go back after some of this stuff. So that's a larger story. Earnings are in play. I know everybody, there's this, retail perspective around everything's fallen apart, and yet prices are going higher, which can create dissonance. I believe that those ultimately sink, and that the divergence is opportunity. But let's be wise about that and recognize that basically everybody who's bought since those releases is in profit. Okay, so when they start to take on water is when we'll start to see some capitulation around that. So definitely watch this 3,900. Very, very important, and kind of a key psychological area as well. Okay. Also, if we go over here and look at the long-term SPY volume profile, we talked about at the beginning of the year, here's the most traded price from last year at 395. We're above that, right? So 390 gets us back below that, which would reject out of that area. We're now free to fly towards that 41, that 415 area. That could be to the upside, but also keep watching 385, which is the yearly open. So we start going back through those, that's where we start to, kind of carry on with the narrative this year, which is essentially that if we're below the most traded price of last year, we're ultimately rotating down into this area. And as far as expected range for the year, just as a reminder, the expected range is this wide. So 70% probability we're in those prices by the end of the year. Pretty wide, pretty early in the year. So we got a lot of time ahead of us. All right. So that's kind of the macro story. Let's start looking at the calendar and get a sense more specifically what's in front of us as we go into the week ahead. And we're going to start with a holiday on Monday for Martin Luther King Jr. Day. We've got a number of things coming out of China. So, those could be impactful when the futures reopen Monday night. Tuesday, we have an OPEC report. We have a Fed speaker. Not a lot going on there. We'll talk about how to kind of look at Tuesday once we get to specific products. On Wednesday, we've got CPI out of Europe. That's before the U.S. open. There's core PPI. So watch these releases on Wednesday morning. We do also have some right before the open and in the middle of the initial balance. So that's going to be kind of wonky. And then we got the Beige book on Wednesday. So kind of a whole bunch of stuff. Not necessarily something really significant, but a lot of stuff playing on Wednesday. Thursday, we've got building starts and jobless claims and Philly Fed all before the open. So expect some pretty good movement before the open on Thursday. Another Fed speaker. And then Friday, we have existing home sales. We have another Fed speaker, but we also have OPEX. So that will be in play as far as like kind of the big calendar event this week is OPEX. Now, on top of that, we have earnings. Not a lot of big earnings names. We got some banks to start the week, Tuesday and Wednesday. Then we do have Netflix on Thursday, but you can see nothing really significant coming out this week. That's going to be more in play in the subsequent weeks. So that gives us an idea of what we're looking for in the calendar. So with that, let's now start jumping into the specific products. And the first place that we're going to start is going to be the ES. And let's take a look here at the monthly chart and get an idea of where we are. Now, going back to this trading view chart here, I mean, we can see all of these trailing VWAPs that are all supported with the auction. And that can be a helpful insight, especially in the environment that we're in, where so much is data-driven around these releases. I would say, typically I'm not as inclined to know where all of those are. It's just how tight those are. But just looking at, where we are from just a pure inventory standpoint, we're really in the middle of the muddle, and we're in between a couple different brackets. So there was a bracket here, this is actually related to the last CPI in November. We're now into this range, right? So last week we talked about, we'll break out of here and push toward 39.95, 4K. That's totally doable and in play. We've got 39.90, let's call it, as the key reference to defend that can take us up towards the top of the bracket. So bracket rules say that when you move from one bracket to the next, once you return to that bracket, you will traverse it unless we rotate out. If we rotate out, we're going to head back toward the 20-day. So we've got 5-day here, 20-day is here. When we go check that on the quick sheet, which you can download that via the link on the website, you can see that we are equal to the 5-day at 39.89, 38.59 is the 20-day, and we've got the 90-day at 39.89, kind of in the same ballpark. Still looking at about 35 points in the first hour, 44 points for the session. So a lot of it taking place early on. 172 points for the week, 41.39 to the upside, 38.97 to the downside, and some pretty good RVOL on Friday. All right, let's get back to the chart here. So as long as we hold 38.90, we can easily push, I think, toward the prior year VWAP. Otherwise, and that's up close to our weekly expected high. Weekly expected low down here would be the top of that CPI range, and actually the trailing 2023 VWAP that we're now above. Okay, so right now equal to the 5-day. As long as we stay about that, we're pushing this way. Below that, look for a return back to the 20-day. That could likely happen on Friday with OPEX. Okay, looking at this on a weekly basis, just kind of get an idea from the where we are from a weekly basis. See, one time framing higher. Clearly, the auction after several weeks of balance off of non-farm payrolls has pushed higher. I would call this a poor low, meaning we didn't really like test into an area and reject out. We've essentially left that. I think that all gets revisited. That the question is when, right? And we can go higher before we can go lower. So know that it's there. Know that we're carrying it forward. If we slice through, which that's where all of those anchored VWAPs are, that opens the door back. 38.60 would be first. However, if we get below 38 or 3,900, that puts us back in the 3,900 to 3,800 bracket, which then puts us on the path to take out the low here, and then it's off to the races to the downside in an attempt essentially to challenge the lows of 2022, which would get us back below the 3,600 area. Okay. As far as what we're looking for when we start the week. Now, this is a unique week because we have a holiday week. So you can see there was a shortened session on Monday. Completely discount that. We're really just leaning on Friday. And what did we see on Friday? We got a new high, no problem there. However, notice that the VPOC is down here. So we're going to be leaning completely on Friday's prices. If we open in range, look for a quick liquidation back in this direction before attempts higher. If we gap rules are in play. It's been my experience that typically on the day coming back from a holiday like this, that, let's say we trade up to 40.50, given that we left value much lower on a composite basis starting the week, that we will reject back and test that. It's kind of like we got to clean that up. So we'll wait and see. And if we're below 39.90, then that can open the door, to start working our way back towards 39.20. We'll just have to see where we open as the session comes in. Okay, so that's kind of what we're looking for in the ES. Let's now go and talk about the NASDAQ. And I love starting here at kind of get an idea of the larger story of where we are. So far, NASDAQ has a pretty nasty low from 2022. We've tested that, so pretty low. Now, there's definitely this descending wedge, it looks like. Typically, as I've seen that play out, because we're looking for a bell curve. Okay, if we now, two ways we can get to the bell curve. We could trade this way and backfill it that way, or we return back through. So we're definitely going to keep an eye out to the downside. We are approaching the most traded price of 2022. So that would be a key test. If we get above 12 400, then I think we can push toward 13K and higher. Until that happens, I'm expecting a rejection and new yearly lows. All right, so I'm thinking of this all as just early responsive activity in the auction. Looking at the quick sheet here, price equal to the 5 days, so same posture as the ES. 11,470 is the price we're watching to begin the week, kind of the key reference. Still doing about 171 points. Great range, great opportunities, 450 points a week. Awesome. Pretty good implied volatility. So there's still great opportunity there. I think that should be pretty exciting to you. Going and looking at the monthly chart here. So where are we so far? We have basically the same low as December. We are moving toward the most traded price of December, on our way higher. And you can see we're in basically a larger macro range. There's a little bit of a bifurcation there, but essentially, I'm thinking of this whole thing as a big range, which is why, unless we can get above 12,400, I think ultimately we're going to fail and get back in this direction. What's a key reference to watch is the 90-day. That's definitely a significant reference to watch on the monthly chart, and also that year-to-date anchored VWAP. If we trade back through that opens the door to the downside. Let's look at the weekly chart. One time framing higher for the week. Here's that 5-day profile, right? So as long as we hold this, opportunity to keep pushing higher is in play. To the downside, if we get through some of these are trailing VWAPs from non-farm payrolls and from CPI, that opens the door for us to start chewing our way back toward the 20-day, which is way back down here at 10,980. So definitely separation between value on a couple time frames, but still have the ability to start moving. Now, another tip to watch is, this is the monthly VWAP in blue here, and we're above 1 standard deviation and near 2 standard deviations. Should we, when do we start to turn? If we start to get inside of 1 standard deviation of the monthly VWAP, that opens a return back to that monthly VWAP. So just be kind of watching. Right now, we're in a very trendy channel to the upside, and as long as we stay above key references, that can continue. When we go look at the TPO chart and just see what the structure looks like, very similar structure you're going to see from what we saw in the ES. Friday they closed on the high, but they left value much lower, so that's going to be a key reference to the downside. And a lot of it will depend on where do we open on Tuesday, with Monday being closed. So, if we open in range, we'll look for early responsive moves to test this area before looking for buyers to step in. If we open above, a test higher and fail, then there's, good opportunity for reversal. In fact, one of my, favorite trade setups is a third period reversal. And that's essentially when you've had multiple one time framing days and you need to balance, especially if you're up here, the auction can reverse. So we'll be looking on a reversal watch if we move higher early. Now, as far as kind of where we're coming back into, let's see if we can get back up in here. There is some selling excess, from the last FOMC that we're coming back to challenge. We've got that 2022 VPOC that's above, and then some poor structure up here from back in the day. If we go back to where we are right now, so there's that 12,700. So that, in my book, as long as we're above the prior weekly VPOC, we're looking for a push to 12,700. We're looking to get up to last year's VPOC, and then we'll see. That should slow the auction. So expect the auction to pause up here. If we just go straight there, the composite's going to be like this, and so we're either going to pause or we're going to reject back in this direction. If we push lower early in the week, and that can be a good upside target. And, should we fail, what do we got to the downside? I mean, really, I think, failure takes us back towards this naked VPOC down here at 11,200 and the current year-to-date VWAP, which is trailing behind us. So, that's what we're kind of looking for in the NASDAQ. You can see here in the TPO chart, this 45 degrees where, sellers are just not getting paid at all. So, when you start to see that, especially as volatility is diminishing, that's a great clue that, don't try and fade this thing just yet, even if that narrative is that we believe we're going to go lower. In fact, if we go look at this, I did kind of a similar story here with the NASDAQ, and you can see all the cluster of those trailing VWAP. So there's really kind of a range here from 11,175 to 11,450. That's all supportive to the auction. But if we get below that year-to-date VWAP, then these lows become vulnerable. So we'll just keep an eye on that. Until then, up to the upside, we've got that 11,700, and then to the top of that bracket at 12,023, all within range as we keep trending higher. Okay, so that is the NASDAQ. Let's talk about the Russell and see what we've got going on in the Russell. Okay, monthly chart. We are pushing higher. Still an inside month so far, inside of a larger bracket. Back above the anchored VWAP from last year, and really kind of going to test the top of this bracket. Russell's done a lot better than a lot of the other products. Began to move from balance as moves happen. Pretty significant move higher. We are now in a posture that really kind of sets us up. And we're going to talk more about this in terms of like ideas. But one of my ideas this week is that we now have the Russell in an extreme posture. So that means that price is significantly above the 5-day, and there's divergence between the 5-day and the 20-day. And like, what does that look like? Okay, so here's price, here's the 5-day, here's the 20-day. As you look at the 20-day profile, see how that's just diminishing as we go higher? So the auction's going higher, but we're getting fewer and fewer participants. That is going to lead to two outcomes, one of two outcomes. One, we either trade sideways in an attempt to pull value higher, or we're going to return back to the 5-day. So that's kind of my initial idea is if we trade higher first, which further exacerbates this, I'm looking for sellers to just step in and kind of say, hey, whoa, we've gotten ahead of ourselves and move back in this direction towards 1855. So I'm going to be looking for shorts towards 1855. I'm not even thinking whenever I'm in extreme posture. And this is related to process. Like how do you have consistent process in your approach? I won't even think about being long when I'm in an extreme posture. Period. No way, Jose. Will not do it. Let's look at the weekly. You see very, very thin up here towards the top of a prior range. Looking for some rejection. So I'm all for them pushing again higher to start the week. Go for it. That's awesome. Just like the other products, we've been one time framing higher. I'm looking for that reversal. So, could come off of 1907. On Tuesday, we're looking for 1917, 1920. So, looking if we go higher first, then look for a push back in this direction. Now, if we trade lower, given where the 5-day is, I'm not going to be long, unless I can get the IB to set up and give me some confirmation that buyers are in there, because this is kind of one of those where you can just liquidate all the way back to the 5-day. And we'll look to, I'll be looking to be short back towards that 1855 until that moves. Now, there's a possibility that we could move it up here to 1880. So that would be an early test spot. So if we test there, looking for potential shorts there, and then we could see some longs off of that if we can pull the 5-day higher. So until then, very much looking for opportunistic shorts in the Russell, and that's one of my kind of key ideas for the week. All right. Now, crude oil. Let's see what's happening in the West Texas Intermediate crude oil. I'm going to start here also looking at the long-term chart, and real quick, get over to looking where we are, almost back to where we started the year. So almost back to the opening of the year. I think that's pretty bullish for crude. We've been in a little bit of a bracket above that. That puts us back on the path towards that $88, $89, dollars area that we're talking about. Now, there was a big push that came from 75. So if that fails, then, new lows to the downside. Let's look at how that looks at a shorter time frame. Okay, here's the monthly. Pretty much a balanced posture. If we go look down here on the quick sheet under energy, so price above the 5-day equal. So let's look at this. 78. So 74 is the 5-day. 78.36. Get back over here to the. We've actually moved the 5-day a little bit higher. So we're actually now in a balanced posture. We were a little bit out of one, but definitely now more balanced. So looking for a move. Yeah, we just moved that from the 74s up. So that's now balanced. Will be reflected very shortly. What does that mean? We do have some excess to get into here. I think as long as we're supportive here, we're looking for a push and then a break higher toward the weekly expected high and some key references up there. What do we got? We've got some naked VPOCs, I believe. We need to add some additional, let's add some TPOs here. And we're going to see, yep. So we got 80.51 to the upside. That would get us, through that excess. And then what do we have beyond that? Then we've got a high volume node at 81.50 and then 82 with the weekly expected high up here towards that 90-day. So, 84 is going to be the key upside as long as we hold 78. If we fail there, then we'll look back towards the bottom. And here's where that strength came in. So here's good strength, good RVOL. That's an area to defend. So really, unless we get through that, I'm looking at opportunities to go now in this direction. Last week, we had talked about, that the profile was imbalanced to the downside. And this is another example of, how do we get to that equilibrium? Well, we can get there. We can either get there going lower or we can backfill it. And that's exactly what we did. We backfilled it this way. And you can see now it's fuller here. So that's also telling us, hey, as long as we hold this area, path of least resistance is to the upside up towards that 85, that 90-day VPOC up there. So that's kind of our key target for the week, 84.22, $85 is what we're looking for right up in here. We'll need to get out of this 81.50 to 82 area first, and we need to hold 78.53. Otherwise we could rotate right back down towards 74.81. Okay, so that's what we're looking for in crude oil. All right, let's talk about some other ideas in focus. And to do that, I'm going to pull up just some other active ideas that looking at here. So first one, I've been looking at this spread between the ES and the NASDAQ, and looking over a 6-month basis, you can see how the NASDAQ is at discount to the ES. So, that's an opportunity for them to come back together. I'm looking to play that, and I'm looking for shorter time frames where they have the same relationship. So you can see right now on a 5-day basis, the NASDAQ's actually, because that spread's been coming closer. So for any new entries, I want to be like this, where the NASDAQ is below the ES and looking for those to come back to each other. So that idea, is in play. I've got some position around that and continue to look for that. Another one, the Russell we just talked about, and then GNRC. So this one, I'll just look here on a 1-day GNRC. So this is a good stock in the electrical space. Things that I've been looking for have been things that have to do with electrification of the world. Be that Tesla, be that motor vehicle companies and so forth. But just looking at the inventory, you can see we've been balancing quite some time in this area, and we're about to challenge where some big selling came in. I'm watching this area for a move out of this area up towards that 180, maybe 224 as a potential. So we'll see when, actually I'm going to create an alert. Nothing that I'm acting on this just yet, and but it's definitely on the radar and carrying that forward. From a just looking back at the last week in terms of playbooks, a lot less active last week than the week prior, but still had some pretty good opportunities. With CPI last week, there really wasn't a whole lot to do, but still looking, going forward, looking pretty good into the week. All right, so that's some ideas in focus. Let's talk about the development focus for the week, and that is the opening range. Now, I get lots of questions, and I see lots of people working around this idea of an opening range, and I understand the interest around it and the desire to be active right when the auction opens. Now, at a base level, if you're not a consistently profitable trader, I think there's incredible opportunity on the open. That's where your highest risk is. Okay, let's just be clear. So if you aren't sure what you're doing, around the open, then the potential to do damage to yourself is pretty high. So let's talk about how to get smarter at the open in terms of like, what are we talking about from definitions and some potential ideas around that. So first, as a principle, we believe that how an auction begins is correlated to how it proceeds. And this is true of any auction, whether it's an estate auction or a housing market or trading Pokemon cards or whatever. But whenever that first bid goes in, how everybody else reacts to that first offering kind of tells you a lot about how that auction is going to go. That's why this is one of the modules that we cover in our pathway. It has to do with module 16, using auction open types to predict the remaining auction. Now, an open type and opening range are not the same thing. So let's talk about what do we mean by opening ranges. So first, we often talk about an initial balance. And what is an initial balance? Initial balance is the first 60 minutes of trade, and it has measurable behavioral edge once extended. All right. So like what exactly does that mean when we say it has an edge? Okay. Well, let's look at the NASDAQ here. So here's the initial balance. Here's the initial balance of the prior day. This range we can measure over a rolling 1,000 period study. So about 5 years of data. I update this on a quarterly basis. But once I've extended one side, the probability that I'll extend the other side drops to 30%. Okay, and that's consistent with almost all products with the exception of crude oil, because crude oil has a binary release every week with an inventory report. So whenever you get binary releases, it increases the probability you'll go back and forth across that range. However, a couple things to know about the initial balance is that 98% of the time I'm going to exceed either the initial balance high or initial balance low. So the IB high or the IB low. Okay, one of those two I'm gonna trade outside of. So if I'm in the first hour, I know that one of those two are going to be breached. Now that is the initial balance. Okay, that's the first 60 minutes. Now the opening range, you'll see lots of YouTube videos about the opening range or opening range breakout and so forth, and people will use all kinds of time frames around that. So the one that I use and the one that other institutional traders and professionals use is the first 30 seconds of trade. Now this is for CME products if you're a futures trader. This was used by the compliance officers on the CME floor. You can go back and look at old compliance reports and actually see that 30-second mark. But it is the initial, open of the trade. It's 30 seconds. So whenever somebody talks to me about an opening range, one of the first things I ask is like, what do you mean when you opening range? Is it they may say like it's a 1 minute or 5 minute. Hey, nobody, like that's arbitrary. Okay. The only opening range is 30 seconds. So if you want to say, hey, I'm trading the first 1 minute, great. First 3 minutes, awesome. I'm using the first 5 minutes as kind of my opening reference, great. But in definition, the opening range is the first 30 seconds. Okay. Now, the initial balance has behavioral edge around that. The opening range does not. So if you go back and do a 1,000 period study on, hey, how many times are we going to trade outside the opening range? Well, I mean, you're going to trade out the opening range 100% of them. Okay. Now, once I get outside of one, what's the probability that one holds and that I don't trade the other side? It's never better than 50-50. It's coin flip. Okay. So that's led some people to say, hey, that's just not useful for me and I can't use it. And I would say, I understand that, and yet you're likely missing a key reason to use that opening range. Okay, so let's go back and look here at this NQ TPO chart. Okay, and we'll actually just go back and look at Friday's trade. If I've got enough data loaded here, hopefully I've got enough here. Okay, good, I do. Almost. Let's get this to we'll go to a 5 minute and have it load. But what you're going to see is that while it doesn't give you a statistical edge one way or the other, it does give you an important reference of control in the auction. And so how I look at that is I say, okay, where is that opening 30-second range? And am I above that opening range high, or am I below that opening range low, to get a sense of who's in control of the auction, and are they pushing toward any specific references that I can then reference as I'm looking to express a playbook trade or playbook idea. Okay, so like if we go back now, let's just tighten this up. We're going to go all the way back. All right. So let's say, for example, so Friday, and we're going to look at 5 minute, but you can see the opening range, opening 30-second high is here, 30-second low is here. So what's the general idea is that if I'm above this range, buyers are in control. If I'm below this range, sellers are in control, right? Now, one of my playbook trades is to look for a prior value test. So that means if I'm inside the prior range, so this is what we were just looking at, and if we're inside of the prior day's range and the most traded price on that day was here. So if I'm inside that range and if I'm above that opening range high, a probable target would be to that reference. And that gives me an idea that I can express in a playbook way. So that when I'm looking at the small time frame here, I'm going, okay, as long as I'm above this opening range, I can use that as a measurement of, hey, do I want to stay with this thing pushing towards that reference? And I can layer that on with other things like a VWAP, volume at price, delta at price to give further confirmation and confidence. But that becomes a very, very important bias of what I'm looking for, and bias in terms of like control. And so that's how I would say you can really do incredible things to that opening range, especially when you lay it over what's happening on your macro profile analysis. So, this is the time frame I'm looking at most of the time intraday. I've got that opening range printed there. So I can see on any product, where am I relative to that opening range high, opening range low, and then, express an idea and, lean on the structure. So I'm using that as a bias reference, a control reference to say, hey, okay, as long as I'm above that and I'm inside that prior range, I know that I'm likely to go get that prior naked VPOC, and that worked out really well on Friday. I didn't take that trade, but worked. I did take that trade, and worked really well. Okay, so that's something to think about when you're looking at that opening range. So a couple other things about that. One, if we drive hard from that opening range, anticipate an open type that's directional and ultimately extension of the initial balance in direction of the impulse. I know a lot of guys that they trade the opening range and they get out and they get a few ticks and then they're done. But man, if it's driving hard out of there, not only are you going to stay out of that first 30 seconds, but you're likely going to continuation and extension into that first hour. So, talk about catching a whale. You could really be there. If we're chopping back and forth across that opening range, it's indicative of a lack of directional conviction and likely an open auction in range open type and a rotational day. Or that could also happen if later in the day we're waiting for some type of, macro release, right? And that could be indicative of that clue. The opening range is very powerful when used in conjunction with profile analysis. So if I know that there's references I'm looking for the auction to push toward, and that initial 30-second opening range is an initial reference of, where is their directional conviction toward those references that I'm expecting excursion in the auction, it can be really, really powerful and something to pay close attention to as you're going forward. So encourage you to use that, encourage you to add that to the way that you're approaching that. Look at that 30-second range. See if that gives you insight into who's controlling the auction as it goes forward. On top of looking at that opening range, a couple ways that you can build skill this week. One is to work on your 4 questions that we ask and answer anytime we put on a trade. You can follow along on Twitter. We have insight sessions that are available to be scheduled via the link to this video. If you want to do more intentional development, you can do that on our desk through one of the pathway options. The software you've seen, in addition to TradingView, you saw EdgeClear and WindowTrader. Great guys. Encourage you to check out what they're doing as they are looking to help traders like yourself have good tools to make good decisions. And then for those of you who are working through the pathway, again, short week, but there's still going to be some cool opportunities this week as we move towards OPEX. So we're excited to look towards all of that. Hey, everybody, thanks for watching. Thanks for using this as part of your prep for the week. Hope it's been helpful. Let us know where you're having aha moments, what's making sense, where you still need some insight, and we'll do our best to get you on the direction. OPEX this week. Watch that 3,900 in the ES and pay attention to that opening range. See if it gives you some insight, and we'll be back next week with another weekly outlook. Peace.